Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody. Now as usual, let's take a look in the gold market. So as you can see, the pattern that we discussed previously has been really formed the second time. It's already that has happened. If you remember, this was the same story. So in the next session we've got the grabber. That's why again. So both grabbers suggest further downward action, and well, it keeps some intrigue in the current situation and tricky moment, because for the long position, as we have discussed previously, we could consider only two possible scenarios: either drop to the 18 even, whereas strong support stands, and we could consider taking the long position, or we need to get clear signs of erasing any bearish patterns that exist in the market. For that purpose, market has to break through the 618 level and move higher, above 20 even. So while market stands below it and keep valid both grabbers, chances on the further drop exist. That's why with these patterns on the back, it's not very pleasant moment to take the long position. It could be really costly, and overall background stands not good for taking the position. Besides, currently market not some significant support. We don't have clear bullish patterns here, so really anemic step for taking the long position. Meantime, for the short trading, overall situation stands relatively friendly, at least by the few reasons. First of all, invalidation point for a pattern stands very close, so risk is not very significant on these trades. Second, we definitely know what the target is, where the invalidation point, and still we have the patterns, and these patterns suggest a further drop. That's why it's relatively simple and not very costly making an attempt of trading of these stops that we have. So on the hourly chart, you could see that the effect on the European Central Bank meeting was very temporal. Market played back all the rally very fast, and now stands at the support. This is former neckline of the hand and shoulders pattern that we have traded initially in the beginning of the week. Now it's also 30% support. So currently we could wait for some pullback here. That will provide even better opportunity for taking the short position, because it will minimize risk and provide better price level. I suggest it should be somewhere 1950, 1952, somewhere in this area. It probably could be the chance to take the short position for those of you who would like to. But also, guys, keep in mind that all the setups that we are talking about mostly has relation to the intraday charts, very short term, with the nearest ending targets, because overall price action stands choppy, and this patterns has very small relation to the daily chart. It's mostly very short term. So on the 30-minute chart, you could see that market's forming something that looked like free drive buy pattern. Actually, it's not really important whether this pattern will be formed or not, because anyway we'll be waiting for a pullback. Whether this will be based on the free drive, or this will be just without the free drive, whether this will be maybe on the hand and shoulders, or something of that sort. Anyway, this will be an area around 1950. This we are considering. The one thing that you should avoid is this type of action. So you could see that's really fast acceleration. Of course, don't be short. It could mean that market's going higher. We need some gradual pullback, kind of the ABCD pattern, something that's right. Let's consider the free drive. So if free drive will be formed, that could put the background for starting upward action. Divergence already stands in place. In this case, minimum target will be the top between the second and third drive, and it points on the 1948 confidence level, 1950 again, so that will be the same area. In this case, risk of the trade will be even smaller. That's unfortunately all that we could consider currently. Gold stands in a tight range, volatility is small, no patterns, actually large patterns on the daily, on the grabbers that we have. And so until these grabbers will not be played out totally, we can't talk about some bullish context. So that's why, whether we would like it to turn around, but we will have to make deal with these patterns that's now standing. Unfortunately, they are have the limited potential. It's not really significant targets compares, for example, to the Great British Pound that we discussed in the first video today. So anyway, let's keep watching. Let's see how it will play out.